Today, I'm going to be sharing with you 5 of the most important warning signs that your stocks are currently in danger and that you might need to reconsider your investment. Let's take a look. How's it going, guys? Ryan here, back with a stock investment video. And let me pose you a question to start things off. Have you ever been in a position where you're holding a stock and you think things are going really well, the stock's been appreciating in value over time, and you're pretty happy with your investment, but then all of a sudden the stock absolutely plummets in value and you have no idea what happens? Well, if that's you, then maybe you did not see one of the important warning signs that you need to look out for to show that your stock could potentially be in danger of dropping in value. Today, what I'm going to be doing is sharing with you my top 5 warning signs that I like to look out for when holding stocks, and these are things that really make me reconsider my investment in a stock. I'll share those with you, and let's kick things off straight away. Kicking things off with warning sign number 1, and that is simply the story changes. But even though it's quite simple, it is probably the most important warning sign to look out for. So what is the story, you may ask? Well, it's basically the narrative that the company is sharing with the public and with its investors. So that's the timelines, the operational performance, the financial performance, everything that they say they're going to be doing and trying to achieve. That is the story which is being conveyed to you. If that story changes in a significant way to the detriment of the stock, what you're going to see is typically a drop in the value of that stock. So for example, let's say you have a mining project and they say the project is going to be operational in the next 2 years. All of a sudden, 1 year down the track, this has been delayed an additional 3 years on top. That is a significant element of the story changing, and it's going to scare off lots of investors, and rightly so, because what the company has promised has actually not come into fruition, and as a result, the stock's value changes from that perspective. So make sure you keep your eye out for if the story changes from the narrative that's been shared with investors to the reality of what's actually happening. Moving on to warning sign number 2, and this is one that should really scare you as an investor if you hold stocks. And that is when the directors themselves actually start selling their own stocks. If you see one director sell a small portion of a stock, that's fine. And typically what you'll see is a letter comes out on occasion explaining why they've done so, particularly if it is someone who is the managing director, for example. They'll explain why they have sold their shares. If you start seeing multiple directors start selling large amounts of their shares, this is alarm bells and a big warning sign that you need to reconsider your investment in the company. Typically, what you'll understand over time is directors run the company. They have an understanding of not only the financials, the operational side, the timelines. They are the people with the inside information. And if things aren't going well, they're going to sell their stocks and try and get out as quickly as possible so they don't lose their own money. And what you'll see is investors will follow suit and start selling the stock, as a result driving the price of the stock downwards. Moving on to warning sign number 3, and this is a big no-no and a big warning sign for investors, and that is companies taking on unserviceable debt. And the big one, in my opinion, is when a company takes on a loan or some sort of finance in order to pay their interest or pay their other loans off. That is a huge warning sign, because it's showing a company is unable to generate funds from any manner in order to pay their existing debts, as a result requiring more debt in order to pay the existing debts. It seems obvious, but it is a very big warning sign that you need to look out for. Now, don't get me wrong, debt is a very important part of business and it is a major requirement. But when you're taking on debt in order to pay more debt, or you're taking on a loan which is clearly unserviceable, the company's not generating anywhere near enough revenue in order to pay it off based on the terms of that agreement, then these are warning signs for you to reconsider your investment as a stock market investor. Let's take a look at warning sign number 4, and this is one for my technical investors out there, people who love looking at charts and data in order to make investment decisions or simply for trading, and that is a long-term trend is broken. In particular, a long-term upwards trend. Of course, what you want to do when you're investing in a stock is look for stocks which are growing on an annualized basis. You want to see year on year that the company is improving, its stock price is improving in performance in all areas when taking on a company for your investment portfolio. If a long-term trend, especially one that's been in place for years and years at a time, is broken on the chart, that is a warning sign that you need to get out. What you'll see, particularly in things such as blue chip stocks, is if these major trends are broken, people start to panic. You'll see that people have stop losses, which they result in selling automatically. That just drives the price down. You'll see institutions start to jump out. You'll see sophisticated and just standard investors get out as a result of these trend changes, and a big snowball effect starts to generate, and the stock price sometimes absolutely plummets. Yes, it may recover, but at least for a short to medium term, there is typically a large amount of suffering from a price perspective, meaning that a long-term trend is a very, very important factor you need to keep your eye on and make sure it does not get broken. Now moving on to the 5th and final warning sign of this video, and this is a psychological warning sign, and it's two things. A, you're stressed with the stocks that you currently hold, or an individual stock, maybe it's your whole portfolio. And B, you're constantly checking the price of those stocks on a regular basis, whether that be multiple times a day, multiple times a week. You're constantly watching those stocks because you are stressed. Now, it's of course all good to watch your stocks and know where they're going to be as a long-term investor, but if you are checking them out of stress rather than just because you need to look at them, that is a huge, huge warning sign that something's not wrong. For those of you who believe in intuition and have a gut feeling about something, if you're confident in your stock, you would not be stressed. You would not have the need to constantly check every single hour of the day where that stock price is currently sitting at. If you are feeling that stress and are feeling that pressure, then typically that means subconsciously you know that the investment is probably not right and it needs to be reconsidered. So keep an eye out for those signs of stress, those signs of checking regularly on those stocks, because more often than not, your gut feeling can really be right and save you from being in a dire situation moving into the future. That wraps up today's video, guys. I'd love to hear about some of your key warning signs that you look out for down in the comments section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.